Dear students, now we are going to study the amount of stationery to be debited to Income and Expenditure Account. The amount of stationery to be debited to Income and Expenditure Account means the actual expenditure of the stationery during the current year, not the actual payment of the stationery during the current year. Actual expenditure of the stationery during the current year is the amount that is to be debited to Income and Expenditure Account. So, the first item on which all the adjustments are done, is the amount paid for stationery. The amount paid for the stationery can be found out from a receipts and payments account. That is, on the payment side of the receipts and payments account, we get the actual amount paid for the stationery. To that figure, all these six adjustments are either added or deducted according to its characters. So what are they? That is what we are going to study now. For that, as in the case of subscription, we have to make a statement, and the first and the heading of this statement is amount of stationery to be debited to Income and Expenditure Account, and the first item to be written is the actual amount paid for the stationery during the current year. That amount can be taken from receipts and payments account, that is from the payment side of receipts and payments account, that is on the credit side of receipts and payments account. That amount is the first item to be written, and the next 6 items are the adjustments to be made to the actual amount of stationery paid during the year. The first item to be added is actual payment made in advance on the opening date. That is, opening date balance of paid in advance amount. That paid in advance amount means the actual amount of stationery paid on the opening date. That means this amount that is paid in advance on opening date is paid in advance of the closing date, that is of the previous year. That amount might have deducted from the previous year's calculation, and therefore that amount that is on the opening date balance of paid in advance amount should be added to. And the next is opening stock of stationery. The amount of opening stock of stationery should also be added. And the last amount is the amount outstanding on the closing date. That is the amount due but not paid. That amount should also be added to. Therefore, first 3 items are the amount to be added. They are paid in advance, the amount paid in advance on the opening date. Next is opening stock of stationery, and the third one is amount outstanding on the closing date. These 3 figures are to be added, and the next 3 figures are the figures to be deducted. They are amount outstanding on the opening date, that is amount of stationery outstanding on the opening date. That means that amount does not belong to current year, that amount belongs to previous year, therefore that amount should be deducted. And the amount paid in advance on closing date, that amount does not belong to current year but belongs to future years, therefore that amount should also be deducted. And the last amount to be deducted is closing stock of the stationery of the current year. Current year's closing stock of stationery is the amount of unused stationery. That amount should not be shown on the income and expenditure account, therefore that amount is also deducted. Therefore these six figures are adjusted, that is either added or deducted according to its nature, and the balance and the final figure or the resultant figure is the amount of stationery to be debited to income and expenditure account during the current year. Thank you.